This conference will now be recorded.
Hey guys, what's going on? This is Carlos, CEO of GAR Capital. This video is for everyone. This is part of the homework that we talked about. Talking about how to figure out your weekly and monthly profit targets and what to do. All right, so a lot of people that do follow us understand the kind of the basis of trading and how we do things, right? But again, you can't know where you're going, right? Or the target you want to hit if you don't have a plan. You gotta have a plan, no matter where you're driving to, whatever you're doing, whether you're working out, driving somewhere, your career, even relationships. You gotta know what's the target, what are you trying to do, what's the goal. See, a goal without a plan is a wish. That's the number one thing we could call it. So again, we're gonna talk about what are the goals in mind. So we're gonna explain a couple of things on the homework that I told you guys to do and have your weekly targets. So I hope you have a pen and paper handy, and your monthly targets. So we're going to assume that there is 5 trading days a week and 4 weeks out of the month. That's 20 trading days a month, right? Let's keep that in mind. Obviously, there's holidays and here and there, but we're just going to assume that. Okay, so I'm going to assume here that you have a $20,000 account just for mathematical purposes. So let's go ahead. First thing we're going to do is create a plan together. You need to have your number. What is your number? If you risk 1% minimum on a $20,000 account, that's $200 risk per trade. If you lost $200 today, how would you feel? How would you feel? Would you feel pissed off? Or would you be like, I'm gonna move on. It's just the cost of doing business. You need to figure out where is the pain threshold. Now, again, there's people who have $200,000 accounts and they're probably like, $1,000 not a big deal. And to them, maybe $200 is a big deal. You need to find your number. The 1 to 2% rule is what we use, 1 to 4%. But again, if you want to do 4% on 20,000, guess what that number is? It's 800 bucks. If you lost $800 in a trade, how would you feel? How would you feel today? And if you hit that 40% threshold on that $800 in profit, you made up 40%, excuse me, 40% of $800, I did that wrong, is $320 profit, right? On that profit take. You took that, let's say you made that in one trade, $320. How would you feel? Would you feel great? Good. Winners feel great. If you made that much on that 1% gain, 40%, 80 bucks. So let's have a target in mind for everything. So let's do this. $20,000 account. Let's make that target $500 a week. $500 a week. How much percentage gain is that? $500 is what percent of a $20,000 account? That's a 2.5% gain per week. So you're going to write that down. 2.5% gain a week plus $500. $500 is the target. If you hit 40% on a 1% trade of your $20,000 account, again, just an example, you can cut this in half, give it 10 or whatever, that's $80 a trade. I want you to think to yourself, if I get $500 even by Tuesday, that's 5 consecutive winners or 6 consecutive winners, whatever, no losses, you did it. I want you to close the computer for the week. You're done. Let's break that down. How about one winning trade a day? 1% winner, 40% per day is $80. 80 times 5, keep that in mind, is not exactly $500. It just isn't. Oh, let me see if I get the calculator. 80 times 5, because I'm lazy. Okay, 80. Okay, 80. I am just lazy and I don't want to do this, but I'm going to do it anyways. Thanks, calculator, for not working. 80 times 5 is 400 bucks. Terrific. If you made $400 every week, how would you feel? Feel pretty good, I hope. If not, that's not enough to make things worth it, fine. But again, you need to find your number. 80 times 5, let's just say, for argument's sake, it's $400 a week, since we're using this number. So let's say $400 a week. How much is that? Again, switching it up, that's a 2% gain per week. It's better than a compounding on a CD. So if you break that down, daily goal is $80 a day in a trade, which is 40% winner without runner on a 1% risk. Weekly is $400 a week, right? What's 400 times 4? That's $1,600 a month. There's 12 months out of the year. How much is that? That's $19,200. You had a $20,000 account. How much is that gain? 19,200. You made 96% in profit. Is that possible? Absolutely. Absolutely, you can do this. If you break it down like this, you can do it. Even with losses, even if you have a loser, keep that in mind. Even if you have a loser and you stick to the pattern, you stick to the plan, you could do this. $80 a day. If you have a max loss, let's say $80 a day is your max loss, you can move that forward. What if you have a great week? What if you make a little more than 80% because you have a runner, you have more than $400, you have runners, and you make $600 or $500? That could offset a losing week as well. You can offset and take away that, but this is your target. Break it down. How do you eat an elephant? One bite at a time. So again, $80 a day, $400 a week, $600 a month equals $19,200 in profit, 96% gain on your 20K portfolio. That's if you go 100%, but you can. You don't have to take every trade we do. Well, you understand that. So again, if you hit your one trade a day, $80, you could be done. You can wash your hands. Or if you hit your $400 a week, you're done. Close the computer, you're set. Even if we get more trades, you're sticking to your plan. You don't have to do anything else. You're done. Don't let greed take in. Keep your plan. That's your breakdown. Second thing, when you make your monthly target, your weekly target, $400, move it over. Move it over into what? You can move it into SPYG, as you can see here, available commission free. Keep it in the same brokerage account that you have. Why? Because if you cash it out, you're going to pay something called short-term capital gains taxes. I don't want you to pay extra taxes that you don't have to. Again, you probably will reinvest it later. I don't want you to keep that money in your brokerage account to trade because you're going to have that urge to want to get into a position. Again, you want to save this money. You can have this as your money to, I just want to grow it, be aggressive, fine, or you want to have some extra income. So put it into an S&P ETF, or you could take a look at more other ones. Here, ETFs commission-free, TD Ameritrade. You can literally cash into a fund family. So let's go ahead and go into funds. Let's go to a bond fund. His corporate bonds, you could do, if you really want to be very, very, very conservative, you could do a treasury collateral fund. Again, you want to go with something that's gross expense ratio that's pretty low. So let's do category. Show more. Show more. There's a ton. There's 571. See if we can find a good bond fund that we could use. Government treasury bond fund, so you could just basically have it in cash, or you can hold it in cash. But again, I'd like you to invest in it into a bond fund to just maintain your money, not even to grow it. Again, it's just your cash, and you could sell it out anytime you want. So let's see if we can find something with low gross. Let's see here. You can do real estate ETF. It's a 0.5% expense ratio. Not a fan of that much. See if we can find some treasuries here. Here we go. 1 and 2 Treasury inflation protected bond fund. This is good. $100. Very low. Again, you can click here. Double click. It didn't work. Bond fund. You can see how much it's grown. You're not going to get a bunch of growth, guys. Keep that in mind. It's moved from 99 to 101 in 1 year. Don't expect the world. But again, if you click on this, you can see very decent dividend, 1.83%. Now, the S&P ETF, the one we talked about, SPYG, has a decent one too. Actually, probably a little less, but again, you want something with good dividends. Again, I'll let you decide which one is best for you. But again, if you want my opinion, SPYG is my favorite. S&P 500 ETF, I own it as well. You own so many stocks and in one fund, very low expense fee. And I can see you go down here. I wouldn't go into corporate bonds or anything like that. I would just want to do something government treasuries around there. You could do short-term market treasury ETF. You could do long-term treasury ETF right here. SPTL. Try that. Pretty decent, 2.5% dividend yield. Okay, so this would be my recommendation because it's long government treasuries. And you could see, for the most part, very, very strong returns, all positive because it's government bonds. Look at these bond returns that you're getting. Again, all government bonds. Again, as long as you believe that the government's going to pay their bills, which they should because they print the money, you should be okay. So again, what I would do is you need to find out your number, and then you want to go by daily, weekly, and monthly. So again, if you make $4 in a week, you could take half of that and put that in the bond fund and put the other half into the growth of your portfolio. or you could put all of it into it, or 30-70, however you feel. But I just prefer that you take some profits and put it into some kind of fund to hold it there for you, so you can see that growth as well, and it keeps you away from over trading. So again, you need to have your daily, your weekly, and your monthly targets. Very, very important. For a $20,000 account, I gave a recommendation of $80 a day, which is one winning 40% trade at a 1% risk. Weekly, $400 a week, and a month, $1,600 a month. Very, very doable. Again, but you need to understand, once you hit that weekly number, the daily number, I can understand you can kind of play without that. But the weekly number, once you hit $400 profit, close out your trades, get out, close the laptop. The best trading weeks we have are when we're done the fastest, and we're done, we don't have to do anything else. Have that discipline to not overtrade, guys. That's what kills clients. It kills traders. I've been there. I have killed myself and my portfolios over trading, trying to catch the next big thing. It sucks. It's very, very difficult. The markets can be very brutal. Once you hit your monthly target, close it out. Let's say you hit your monthly target in the second week, you're done. If you hit your weekly target in the first day, you're done. Close the computer. And I'm telling you, you do this, you stick to your discipline, stick to your plan. I'm telling you guys, you're gonna do fine. You're gonna make some money. This will kill any fear of missing out, because you have a goal and a target. So keep that in mind. The two funds I recommend, SPTL, Long Treasury ETF, and SPYG. You can take a look at other ETFs on TD Ameritrade. We recommend you do. They great for us. We like the TOS. You don't have to use this. You can use Robinhood, whatever you prefer. These are all commission-free ETFs, so you can get in and out without charging any kind of fees. So again, those are your monthly targets. Stick to them, guys. And again, play around with the numbers. Again, you know your numbers, stick to it. You know yourself, stick to the plan. I highly recommend you do this today. Take 10 minutes out of your day, stick to your plan, and leave it at that. This will get you on the path to being a profitable trader. Let other people go without a plan. They're gonna get burned. The longer you're in the market without a plan, you're gonna get burnt. Stick to a number and stick to it. Be disciplined. I know you can. So this is just some trader tips here. This is Carlos, CEO of GAR Capital. Thank you so much for watching the video. Any other questions, feel free to email me or DM me, garcapital@gmail.com. Have a great rest of your day, guys.